when Anthony first asked me to work with his team to put together this panel, it's in Jacksonville in August. I said, I accept right away. This is the best place in the world to be in August. And this is a panel of 4 of the very best companies in the Bitcoin mining space globally. So really excited to introduce all of our panelists. We're at a really critical time, right? We just went through the halving 4 months ago. Halving is a big deal in the Bitcoin space, but in particular for miners. We're obviously in an election cycle right now. We're in a global liquidity cycle. There's a lot going on. So I want to get right into it with the guys here. Why don't we start with Zach with a quick introduction of your firm?
Yeah, Zach Bradford, CEO of CleanSpark. We're the leading low-cost producer of Bitcoin in the country right now. We're 16 data centers across, I think, 5 states right now. And just look forward to continuing to grow through this next cycle and staying on the leading edge of efficiency.
Good morning. This is Salman Khan. I'm Chief Financial Officer of Marathon Digital Holdings, MARA. And we are a global Bitcoin miner. We are the largest in this space as of now and continue to grow. And we are very excited about the developments that are happening in this space and also the growth that our company has experienced and the trajectory of Bitcoin where it's headed towards.
Morning, everyone. Patrick Fleury, CFO of TeraWulf. We are a low-cost, predominantly zero-carbon energy power infrastructure company. We mine with about 10 exahash of miners today, and we are the only behind-the-meter Bitcoin miner at one of the nation's largest nuclear facilities.
My name's Glenn Harrison, VP of Operations for Canada, so I run the data centers in Canada. IREN is a next-generation data center company. We have 260 megawatts running at the moment. We're growing to 20 exahash next month. We use 100% renewable energy, and we're looking to grow to 510 megawatts by the end of the year.
Great. And just for full disclosure, I'm a board member at IREN, and I'm also an investor in one form or another in all 4 of these companies. Let's get right into what's going on with the convergence of power with AI, with Bitcoin. I think a lot of people incorrectly categorize these companies as just Bitcoin miners, and really what a lot of them are large-scale power and infrastructure developers. I think the market really figured that out when Core Scientific did a transformative deal with CoreWeave recently. All of a sudden, the big traditional hedge funds are interested. If you looked at the 13Fs that came out last week, on August 14th, we saw Stan Druckenmiller, Louis Bacon, George Soros, et cetera, taking positions for the first time in many cases in some of these companies. Maybe we start at the end. How is IREN thinking about the energy, AI, kind of power convergence with Bitcoin, and what is your strategy for addressing the market?
Yeah, the digital world's growing exponentially. We all know that. We actually had in our seed deck in 2018, like AI growth is one of the core components of our business. Obviously, we didn't know what was going to happen in the last couple of years, but we, as it grows exponentially, we knew that infrastructure can't grow exponentially. We had a lot of infrastructure people, the founders, specifically Dan Roberts through Palisade Investments and Macquarie, just knew how hard it was to build large-scale infrastructure, how slow it was. It takes a long time for governments and bureaucracies to approve connections and the like, especially in power. It takes a long time to find the right land and to procure. I mean, you try and procure medium voltage switchgears at the moment or anything else, it takes many, many months. So you can't rush that process. So the arbitrage between the physical world and the digital world, which grows exponentially, is just so significant that the opportunities are there for longer than in other markets. They don't last like mere months or maybe a couple of years. They last for a long time until the supply and demand catches up with each other. So with AI, obviously the growth over the last 1 to 2 years continues. I think the top 10 HPC companies in the world have spent $380 billion on infrastructure this year, which is $50 billion more than they spent over the past 3 years combined. That just shows the growth. It's real, and it's not stopping soon.
Patrick?
Yeah, look, I agree with everything Glenn just said, but I always try to put it into context for folks. So I spent the majority of my career as a institutional buy-side investor in energy, power, and commodities. And so when everyone's talking about tech now and the growth of high-power compute and AI, they talk, like Glenn said, like it's just easy to do. So let me just put that into context. So roughly speaking, today in the United States, there's about 20 gigawatts of data center demand. That's cloud, high power compute, and AI. That is projected in 4 to 5 years, depending upon what source you reference, to double, so to go to 40. To put that into context from a power perspective, California, state we all know, we're not too far from, is the 5th largest economy in the world, and it has an 85 gigawatt grid. Okay, so 5th largest economy, 85 gigawatt grid, and you're talking about high power compute, data centers, and AI consuming half of the power of the 5th largest economy in the world, in the US. So that is fundamentally going to change the way power flows, the way we all use power, the price of power, which obviously, more demand means it's inflationary. And so I think exactly like Glenn mentioned, what's unique about our company is we've taken former power plants and converted them to Bitcoin mining and data centers. And that means we have a lot of existing infrastructure from which to leverage. So exactly to Glenn's point, the utility system in the US is very slow. And so it puts a massive premium on companies that have the interconnects and that have access to power today.
Go ahead.
When I think about power and energy, coming from oil and gas and energy background, years ago, I got the opportunity to develop solar, wind, and geothermal projects in the energy transition space. And the way the grid is locked and how inefficient it is in terms of getting your permits across the board and getting the approvals, there's a huge backlog when it comes to developing these utility scale projects that not only help power data centers but also other utility needs that exist out there. So certainly agree with the two gentlemen on my left hand side. This is a problem out there. Now, how are Bitcoin miners reacting to it? From Marathon's perspective, you're a Bitcoin miner, and there's X amount of electrons that are available to mine. How do you utilize that? Now, the question is how capital intensive is AI in HPC, and how much time to market, because by the time you get to the finish line, and the rate of returns that you would expect are not going to be that different or that attractive compared to what you could do with Bitcoin mining as of today. So it's certainly an interesting space right now, but the way Marathon has addressed the AI component to it is that we have the technology division, and we have developed two-phase immersion technology that helps cool the miners and GPUs. And we believe that's the future for not only the Bitcoin mining, but also the GPUs that NVIDIA is planning to roll out in the next few generations, if you like. So certainly there's an aspect to that. Other than that, the only common thing between Bitcoin mining and HPC and AI is just the interconnect. And that is common with not only this space, but also many other spaces or sectors, if you like.
So are you saying there's a chance Marathon might eventually get into the AI space?
I can't comment on that as of today, but the way it is structured today, we are purely focused on continuing what we are good at doing, and that is Bitcoin mining.
Great. Zad?
CleanSpark, we were actually an energy company first, and saw the opportunity in 2020 where we believe the best way to monetize energy is in Bitcoin mining. And, we've stayed heavily focused on that. And that is happening because we've chosen to own and operate what we do. That's always core to what we have. So what you've heard from all the panelists that I don't need to repeat is that there is some scarcity in especially the U.S. power grid that there's going to be a lot of demand for. Each of us have access to it. But how do we have access? Our access, again, is through interconnects, but do we own the infrastructure? Do we operate our data centers? So that's something that we have always taken a focus on, and it's why we actually operate the largest amount of megawatts that we own directly inside the U.S. And so we take the view that we don't need to be right or wrong about AI today. We've made it very clear. We have no intentions of shifting our focus. We believe that Bitcoin is the most valuable thing to do with those electrons, and something that happens a long time in the future, AI, we still have the power contracts. We still own the land. We still own the infrastructure. We could, of course, monetize that later. But I think the fact that we're in the room we're in, I think that most of you would agree with me that Bitcoin is an asset that is so valuable. Why would we look at anything else? So that's how we've approached the space. And so we have no intentions to turn our focus anytime soon.
Yeah, it's interesting because I think a lot of people in this room would agree with that Bitcoin has tremendous value. But when you talk to a lot of traditional investors at hedge funds, they still don't understand Bitcoin in 2024, but they do understand AI. In fact, they're all bullish on AI. So I'm starting to view AI as just a Trojan horse for Bitcoin mining capital cost, right? Because the capital cost is coming down. But let's segue a little bit because I think there's a lot of misconceptions around Bitcoin miners. One of the big ones is actually that all of these miners do the exact same thing in the exact same way, and it's just a commodity business where if you can get your cost really low, you win. I don't think that's the case, having gone deep on the space over the last 3 years. So maybe we can start with Zach. Like, how is CleanSpark really different than some of the other firms on the field right now?
Flexibility. And all of us as miners, we say, we can be a tool to the grid, and we can be. But how many of us are really set up to do that is what we've always focused on. So we've taken the approach that we are exposed to wholesale power prices. And that's actually the best way, we believe, for Bitcoin to function. Right now, many of our sites run 365 days a year, 24/7, all the time with, half a dozen hours, here or there, we're curtailing. I will say we're not in Texas, which is why we're allowed to do that, because we've approached the grid from an abundance point of view, and that's always been our view. But if we go in and we look at what happened with, a lot of the miners when we had the events happen with Russia and Ukraine, natural gas prices spiked. And a lot of these fixed power prices ended up not being so fixed because the people behind them tore the paper up and said, one of us is going bankrupt and it's not going to be us. And so we always like to have that exposure. We've been able to outperform what would be the equivalent hedge, over and over and over again. And I think miners will get more and more flexible. There's going to be a point in time where the average miner runs, maybe it's 21 hours a day, or maybe it's 12 hours a day, because we will be flexible as, rewards over the next 15, 20 years are going to get to the point where we're going to be dependent on the rewards and the fees instead of the base on that. And that means we're going to be chasing and arbitraging power, and we're going to be doing it so well that we'll be partnered with utilities. So maintaining flexibility, that only happens when you do have true exposure, of course, in a smart way. But also you have to own your sites. You can't trust somebody else to run and chase that arbitrage in the same way. So being true energy experts is going to be required of every Bitcoin miner, and it's how we've approached it, first and foremost. The next thing we do is we've always pursued the efficiency side of the equation, and that's not just in the servers and how many watts per terahash we use, which again, we are the lowest. It's all the other pieces that go into a really streamlined operation. A traditional data center would be looking at, 9 nines. We look at it as for every moment that we should be up, are we up? For every machine that is running, how quick, if it goes down, could it be repaired or a new machine slot in its place? A heavy pursuit of efficiency is necessary. And that's the beauty of Bitcoin. The algorithm itself actually pursues efficiency. With the reward getting cut in half, it is telling mankind, be more efficient. And so we figure we're just doing what the algorithm is best suited for, and it's served us really well, and we believe it'll serve us well over the next cycle also.
Yeah, and if I also may add, CleanSpark had one of the most aggressive growth ramps over the last 18 months. And I remember distinctly you and Matt were buying sites and investing in miners in 2022 when the whole industry was hiding in a bunker. You guys were out in front of the market. Turns out there is a timing component to running a Bitcoin miner as well. So I just wanted to call that out. Salman, how is Marathon different than the other miner?
Well, Marathon is there's a history of Marathon being an asset-light company. And years ago, our CEO and chairman at that time raised $750 million from capital markets and deployed that capital to buy miners at attractive prices at that time, and rented space, rack space, and operated that way. beginning of this year, we announced 2 major acquisitions with 3 data centers here in the United States with 690 megawatts of operational capacity, and further expandable to 900, almost a gigawatt in terms of capacity. So with that, now we are 50-50 split between asset light and asset heavy. What that has allowed us to do is to be more efficient from an operating perspective, deploying our state-of-the-art technology, but also finding those opportunities where we can do the energy arbitrage. Now, one thing to realize is that this is a known secret in this industry. Bitcoin miners do act as an intermittent power consumers. We do act as the balancing factor to the grid, and that is a very important aspect, because when we compare this to AI and other industries where you have base load electricity, you need 24 hours of electricity. You can't be driving your Tesla and suddenly your service went down and your auto driving cell feature stopped because as a result of that. In this case, you have that intermittency capability that is a strength in this industry. So having said that, from Amara's perspective, we view ourselves not only from a Bitcoin mining efficiency perspective, but also the technology stack. So we have built our own firmware. For example, we run and own our own operating pool, Mara pool, for years. We believe that has provided us the efficiency levels that is a competitive advantage compared to others in the mining space. But the whole story here boils down to, we are all miners. We're all in the mining business. It's a race towards the 21 million coin. And how do you go about solve that problem? And the HODL strategy, for example, has helped us as well. At the same time, our stockholders love that. We have 25,000 coin on our balance sheet. That's $1.5 billion just in Bitcoin invested in our company that will be accretive in the long run.
Great. Patrick's.
Well, I've had a lot of coffee this morning, so we're in Jackson, so I'm going to spice it up a little bit here. Mike and I have debated this, actively back and forth. But look, I have a very different approach. I come from traditional finance. I love Bitcoin. Don't get me wrong. It's probably going to be controversial, and so that's why I'm saying I'm going to spice it up. But to me, Bitcoin is it's a very simple business. Bitcoin mining, right? It's like any other commodity business: oil and gas, coal, copper, right? We mine Bitcoin. We have 3 costs in our business: power, SG&A, and operating expense. That's it. It is super simple. I can tell you exactly today. I looked before I came up here. We're mining Bitcoin roughly for our entire company. Every cost in the company at roughly 40,000 today. It's on the screens at 60. I'm going to mine about 7 Bitcoin today. So 7 Bitcoin, 20,000 of gross profit. I'm making 140,000 in free cash flow today.
That includes depreciation. And
that does not
comp, and
that does not include depreciation. That includes power, which is the number one input cost, SG&A, and operating expenses, which are site level people. That's it. So when I think of cash marginal costs, just like the oil and gas business and dollar per barrel, that's how I think of mining Bitcoin, okay? And in my view, again, from traditional finance, my job is to mine it cheaper. And then our strategy at our company, which I think Glenn will enumerate, is similar to his, and it's kind of nice to have some diversity of thought around here. I think we're all big supporters of Bitcoin, but our approach is we monetize what we mine. And then we take those profits and we reinvest them in growth. That can be organic or inorganic, or we are also diversifying into high power compute and AI, because as Zach rightfully pointed out, we have access to electrons. The highest and best use of those electrons to date has been to mine Bitcoin. Now, some of the highest and best use for those electrons is to continue to mine Bitcoin, but to grow and dedicate some of those electrons into high power compute and AI. And you may ask, well, why is that? It's pretty simple. Bitcoin mining is kind of like refining, in my view. Refineries trade at 6 to 12 times EBITDA. They always have, and they're price takers. So peak to trough cycles, they kind of trade around. If you look at data center companies, public ones like Equinix, Digital Bridge, Digital Realty, they trade at 20 to 25 times EBITDA. So I can tell you, as a management team that has a massive stake in the equity of our company, that is very interesting to us because, again, we are an energy power infrastructure company. And so I think of mining Bitcoin, again, from a traditional finance perspective, it's like any other commodity business. And you, as an investor, should know exactly what the cost is. You go look at Valero or ExxonMobil, any legitimate commodity business, and you can tell in 10 minutes what their cost is. And so for all of us up here, I think we should all be held to that same standard. And then, look, I think Bitcoin will be much higher in the future. So don't get me wrong that, just monetizing Bitcoin is us opining that it's not going to be higher. That's not true at all. But my job as a mining company is to maximize profits. If you want to own, or if I want to own Bitcoin, I can go buy an ETF and pay 5 basis points and never worry about dilution. Or I can go open up a wallet, right, and own it at Coinbase or wherever you prefer and never get diluted. That is a different game versus buying a miner. And when you want to buy a public company, a commodity company, you want to go after the lowest marginal cost producer. And that's my approach. And I know it's a bit controversial. I think you'll hear some of the same from Glenn, but it's a very different approach, I think, than some that for all of us up here.
What's the source of your power, though, too?
Yeah, so we are behind the meter at one of the nation's largest nukes. That facility is called Susquehanna. It's a 2,500 megawatt nuke in Western Pennsylvania. We actually, some of you may have seen it in the news, but Amazon recently bought that site from our partner. So they are actually our new landlord. They paid $650 million for land and a substation and the right to purchase up to 700 megawatts from the nuke in the future. Right? That should be a big light bulb going off that the biggest companies in the world recognize that we are in a power struggle here, and access to low cost, zero carbon, and uninterruptible power is the key to the game. We also mine at another site that's a retired coal plant site that's 35 miles east of Niagara Falls. So predominantly all of our power that we are getting is very low cost, zero carbon power. As an example, last year, our average power cost for all of 2023 was 3.2 cents.
Good.
Yeah, I concur with Patrick there on a lot of those things. We're an infrastructure company. We've built 100% of what we own, everything, every substation, every data center. The only thing we purchase, obviously, is the electrical equipment and the miners themselves. Now, what that means is that from the word go is we've had to learn over 5 years how to build that really efficiently, and we're getting increasingly efficient at building it. I feel like when you invest in companies like all ours, you invest in the people and the learnings of the company. So if you've spent 4 or 5 years building something, iterating it, building it again, iterating it, and continue to build that vertically integrated stack, and that's your business model, you learn so much from it. I mean, from the Bitcoin mining side, we got to 80 kilowatts a rack, which is more than nearly any data center did 2 years ago, with a PUE of 1.05. And that may not mean too much to everyone here, but that's incredible. No one does that. And that was just doing Bitcoin mining. That's what we learned. We learned how to buy loads of different properties, get the connection agreements. We've got 2.3 gigawatts worth of properties we can build out over the next few years. And those learnings are really, really important. From a HODL, non-HODL perspective, it's like you put a whole bunch of Bitcoin on your balance sheet and you spend tens of millions a year on SG&A to manage that versus a MicroStrategy with a cost of capital far lower than ours, or an IBIT Bitcoin ETF where you pay 25 bips. It just doesn't make any economic sense. What you're doing is, what we believe is you're investing in a company and the minds of those people to continue to learn to develop that infrastructure and from the ground up. And it has taken us a little while to get going because we've had to learn that. But towards the end of this year, we're going to be building 50 megawatts every 30 to 40 days on that 2.3 gigawatt pipeline. That's 3.5 to 4 exahash if we had the money to buy miners every 30 to 40 days growth. I don't know any other company that can do that. And that's because we've got this flywheel going. It's like the Titanic. You get it on a course. It's very hard to get off the course. You need to make sure that you're building the right infrastructure and it works. Not infrastructure with 50% uptime or 1.3 PUE. And that's been the journey for 4 or 5 years. And that's why I'm a true believer in not diluting shareholders through hodling and putting that money back in the company. Now, if the company's market cap went through the roof and it was beyond the fair value of what we thought business would be, maybe it would be worth issuing shares and buying Bitcoin to maximize shareholder value. So there's always that opportunity in the future.
Be careful with that Titanic analogy. So let's go from the kind of strategy to the thesis for owning the stocks. Obviously, a lot of people are continuing to be pretty bearish and negative on the sector, even though some of your stocks are actually up 5 or 10x off the bottom in December of 2022. People don't realize that. So you've had a great run, but my view is it's still pretty early in the cycle. Still feels like kind of the second or third inning of your CapEx build out, your growth trajectory, right, where Bitcoin is. But people are still bearish. They don't like the halving, right? So you talk to institutional investors, they don't understand why you put all this money into the sector and then your revenue line gets cut in half every 4 years. They don't like all the CapEx, the heavy duty infrastructure that goes in. Obviously, that's a barrier to entry to others, right? And so in the long run, it should be helpful. But what do you tell investors? I know we'll start with Patrick because I know you're talking to a lot of people and you've talked to a lot of the biggest firms in the space. What's the thesis for why they should own TeraWulf?
Well, like I said, we're different. we're different than everyone up here, and probably we have a similar philosophy to Iris. But look, I think to Glenn's point, what you're getting is our management team has been together in one capacity or another for a very long time, and by buying our company, right, you're getting energy power infrastructure DNA. You're getting a very profitable kick butt mining business. We're mining today with about 250 megawatts. Again, 50 megawatts at a nuke in Pennsylvania, another 200 megawatts 35 miles east of Niagara Falls. That business, again, our fully loaded cost, marginal cost, might $40,000 a Bitcoin. And then there's a lot of operating leverage in that business, right? Because our costs are largely fixed, just like any other commodity business. So if Bitcoin runs, we've got the ability to make a lot of cash. So for us, what's really interesting is we, for a long time, had debt. We've taken free cash flow and some dilution to equity to repay our debt. Now we are debt free. And what that's allowing us to do is really diversify quickly into high power compute and AI. So at our site in upstate New York, we have another, call it 500 megawatts that we can dedicate to Bitcoin mining or to high power compute and AI. Based on the customer conversations we're having today, it is very likely that will be high power compute and AI dedicated. Those contracts, similar to our peer Core Scientific, who's, by the way, doing a magnificent job, commend that whole team, and their deal that they recently announced with CoreWeave. If we can enter the business in a similar way with long-term customer contracts, and that deal requires zero equity, that's where I'm trying to drive us, because then we have a positive free cash flowing Bitcoin mining business, and we have now a high power compute and AI business with very long-term contracts that gets a very high multiple in the market and no need for equity. That's kind of Shangri-La for me, because then that means for the first time in our company's short history, I actually have a capital allocation problem, and I get to go to my board and say, hey, let's pay a dividend in cash. Let's pay a dividend in Bitcoin. Let's buy back stock. Like, what can we do with the free cash flow that we're generating from our Bitcoin mining business while we're doing this massive expansion into high power compute and AI? And just, I know, again, back to the megawatts, we all throw around megawatts like they're easy to come by, and 100 megawatts, just to give you a sense, 500 megawatts of expansion in the high power compute and AI, that's over $15 billion of capital. So we are talking like massive, massive capital investment from mostly, like, the biggest piece of that capital expenditure is GPUs, which our customer is buying, not us. So we are taking the approach of, we are energy and power and infrastructure people. That's in our DNA. So we will build that infrastructure, and then the customer will bring the GPU, and the customer will spend the most on CapEx and take the GPU technology risk. So that's kind of where we're trying to drive our business, Mike. I hope that answers.
Yeah, look, I've been watching your stock for the last week, and the market seems to like what you're saying. So we'll see what happens. Salman, what do you tell investors about why they should be marathon shareholders?
Well, this is, as you said, institutional investors are interested in this space much more than they were a few months ago, a few months ago. And we're seeing that that phone bell ringing and the interest significantly increasing. The 13Fs came out fairly recently, and we're seeing a much more higher ownership interest from an institutional perspective. We're close to 60% now owned by institutional investors, and this shows how much interest this space has been creating for institutional holdings. Now, when it comes to long term, as you said, every 4 years having happened, right? And the question becomes, what is the future of this space? Right now, we believe the way utility scale mining exists, 4 to 8 years from now, things will look very different. And mining will not be the traditional utility scale mining the way it exists today. It will be what we call the energy harvest business, that we created a business unit in addition to the utility scale mining that is focused on, for example, we are heating 11,000 homes in Finland utilizing Bitcoin mining. And those are the kind of innovations that you see when you have the scale, when you are a large player and you are looking at the future from a longevity standpoint. You invest in these newer technologies and newer ways of doing business, and we're very proud to be part of that and expand this mantra of creating Bitcoin further from here as we go along.
Brad, Zach, you want to go next?
Yeah, strategy over ideology, flexibility, and those are the key things. And what I mean by strategy over ideology, this industry is full of ideology, and that usually it has to do with holding Bitcoin on the balance sheet, buying Bitcoin for the balance sheet. We don't buy Bitcoin on our balance sheet because we believe that miners are there to produce it at a lower cost, and that's the value we bring to the market, is produce it, for $40,000 and take the margin. We do add it to our balance sheet currently. We didn't a year ago. So we are watching the bear and bull cycles. We're big believers in the cycle. As you mentioned, our focus on timing. We believe in growing the hardest and heaviest during bear cycles. And now as we build into this bull cycle, which, I think I made it pretty clear as I've spoken about it, I believe kicks off sometime between September and January. And so that's why we're holding our Bitcoin. We started holding all of our Bitcoin last June. And there will be a point in the next cycle where we sell it and we monetize it, because that's the reason we're holding it. We believe that we should mine Bitcoin, hold it on the balance sheet, eventually sell it so that we can get more Bitcoin in the future. And we are going to follow the cycle. A value of Bitcoin is actually using it, putting it out into places where it can be used by everybody else. We're not necessarily here just to hoard the Bitcoin. Does it mean we're going to dump it off a cliff? No. Our goal is to monetize that. So again, we are not ideological. Instead, we're strategic because we believe that's the best way for a company where we have a fiduciary duty to manage our capital. And then flexibility. We have no debt. We're not going to leverage ourselves up to do, many things. And that's going to allow us, again, to weather the bear cycle. We want to be in a bear market and buying distressed assets. We don't want to be the distressed asset. And with a market that's this volatile, you have to prepare. And the last thing I'd say is based on our track record. We, as Mike said, we've been the fastest growing miner. We came on the scene, with 0 in December of 20. We're now the second largest by market cap and also by hash rate. And, on a mission to continue growing that in the most capital efficient way possible.
Yeah, and you certainly addressed one of the things I hear a lot from investors, which is why not just own MicroStrategy? And of course, MicroStrategy has to use the capital markets to acquire Bitcoin. It's not part of their core business model, whereas the miners have the operating leverage embedded in the model itself. But Glenn, your thoughts on why people should own IREN?
Yeah, so we've currently got 2 business streams. AI cloud computing up in Prince George, which we earn $15 to $20 million revenue a year. It's not huge compared to our Bitcoin mining business, which is a lot larger than that. But we're looking to grow both those businesses. And we started that in February. That's all quite new to us. And we continue to learn rapidly about what customers to have, how to offer that business, how to grow that business, how to create our own cloud platform, and the like. So we believe that will continue to grow. We're not sure exactly at what rate. But then there's a third prong, which is co-location, and we're actively pursuing opportunities in the infrastructure space for colo, which essentially means, to what Patrick was saying before, someone comes in and brings their own GPUs and we build what they need. Now, They can use our current data center design, especially in the temperate environments of BC and potentially in Childress. We're doing some testing in Texas as well in that very hot environment. However, if they want something else, a tier 3 design, liquid cooling or whatever else, we're very well progressed on those other data center designs that those customers could want, and we're actively pursuing those opportunities. We've also got a very large site down in Texas, 1.4 gigawatt site, which we're actively pursuing potential sale options, joint venture or colo through a Morgan Stanley proposal at the moment. So, and that's been going for a couple of months. Something may happen in the foreseeable future, 1 month, 6 months, or not at all. We're not sure. So we continue to pursue that. We believe the market will decide in that respect. From the Bitcoin mining itself, our infrastructure platform and those foundations I was talking about before, and that flywheel is just going so quick now that our growth this year will be quite extraordinary, from something like 5 exahash to 30 exahash by the end of the year. So there's just a lot of irons in the fire. Bitcoin mining side at the lower bookend, if nothing happens on the HPC side, is worth a lot. And then on the HPC side, we have many good people working through those opportunities and try to take advantage of that significant demand while supply is relatively scarce.
Great. So given, just as a final topic, how important the cycle is to Bitcoin miners, obviously there were a bunch of people who thought the cycle would end earlier this time because of the ETF, right? So maybe the cycle's pulled forward to 2024. I think that's looking less and less likely. We're still sitting underneath, the all-time highs now. A lot of people think 2025 would match kind of the historical trajectory of the cycle. And now I'm starting to hear more people coming around to the idea that maybe we have a 2026 or even 27 cycle top, which would be a greatly elongated cycle. How are you thinking about the cycle, just as quickly as possible, either in terms of timing, timeline, price ranges? Let's start with Zach.
I said mine. I think the bull cycle kicks off between September and January. And I think we've got a good cycle. What I like now is our intention is it doesn't matter as a company. We've set ourselves up to be, we always look at it, if we're the 25% percentile when it comes to efficiency, power prices, and everything else, Bitcoin price can be whatever it needs to be, and we'll be fine. It's the difference of surviving and thriving. And, we're looking forward to, again, hopefully a early year, late winter kind of kickoff in a bull cycle. And if we're wrong, then we're good anyway.
Got it.
I think there are lots of tailwinds in this space, and Bitcoin price, agree with Zach, the price is expected to go up as we go along from here. The key thing to think about is in the short run, there are some nuances like the Mt. Gox, the U.S. Selling the Bitcoin and all that stuff, and then there's political drama around it as well. You've got one presidential candidate supporting it fully, and then you've got another who's yet to disclose their position on this. So there's a lot of interesting things in the next couple of months. But listen, we have bought Bitcoin years ago. We are the largest miner. We are targeting 50 exahash in the next couple of months, which puts us in a different position altogether. We're growing globally. We're continuing to invest in our mining business, but also we are diversifying our revenues through technology and other opportunities. At the same time, the Bitcoin HODL on our balance sheet is the highest from a dollar Bitcoin per share perspective after MicroStrategy, and that gives our investors that opportunity to earn the upside as the Bitcoin price goes up, and at the same time earn the arbitrage or opportunity to earn rate of returns from our Bitcoin mining business. So very excited about that.
Yeah, look, I get asked this question all the time by institutional investors, and I can tell you if I knew, I wouldn't be sitting right here right now, right?
You still might, though.
So, look, I again, having spent a career in commodities, I wish I knew where oil was going to be or where Bitcoin price or network hash rate was going to be, but I don't. But what I do know, and I'm always reminded, there's a quote I really like, and I tell my children this all the time, by Zig Ziglar, which is, success is when preparation meets opportunity. So the only thing I can control in my business is my cost. So I'm laser focused on making sure we are the most efficient miner that we can possibly be. If I can control my cost, then when the bull cycle comes, I'm in great shape. I'm going to make a lot of money. And so that's really like what we focus on. And, I hope it comes hard and fast and Bitcoin price rallies, but I just don't know. And so again, like we really try to just internally focus on doing everything we possibly can to prepare for that. So when the moment comes, we can kind of seize the moment.
Great. Glenn?
I think you called maybe December 25 as the peak a while ago. I don't know if that memory's true, but yeah, I think that might be close to where I think it will be as well. Obviously, I don't know where it's going either. Markets hate uncertainty. You got the US election coming up. I just think there's a lot of uncertainty around that, to be honest, at the moment. So I don't think it's going to move in the very short term. There's been a huge amount of consolidation this year, but you compare Bitcoin to a year ago, like the fundamental analysis of Bitcoin as an asset class, it's so much more valuable this year than this time last year. It was like 12 months ago. Think about what you were doing 12 months ago. How many institutional investors have got access to the ETF or have purchased MicroStrategy or purchased the miners? I mean, there's a lot of powerful people, a lot of powerful institutions with a lot of say globally and with governments and the like. So I just feel like the asset class is so much more valuable now. The price hasn't really reflected that. The consolidation this year has been huge. 600,000 or 700,000 coins from liquidated entities and the like have been sold. So that has to play out. It always takes longer than we think it's going to play out. But I think next year will be a good year.
Good. Thank you for those comments. I think it's a really critical time to be invested in this space. I think we just had a nice drawdown over the last month. So for people who haven't taken positions yet, I even got calls from crypto hedge funds who said, I'm so sick of these freaking tokens that won't go up. Can you tell me more about Bitcoin miners? So people like the tangibility of it, the fact that they can hold hard assets. You can actually build a margin of safety, like classic value investor model for holding these companies. Hard to do that with ABC token that just launched last week, meme coin. So anyway, thank you guys very much. Thank you everybody for being here. Appreciate it.